Hello, everyone. Alexander, Richard, Hugo. Super Bowl indicator is bullish, right? NFC team. And there was a nice little pop that we had in across the board in the euro, etc. And, you know, I look at the yen here. I don't think it's done. And I also congratulate Stella. Are you here? How many handles did you pull out the S&Ps? You covered this morning, right?
Hello, I did this morning. 60 something. I have to check.
Okay,
but yeah,
nice.
It was, and you know what? I was chatting in the chat room this morning when we were down quite a bit again, and I was saying, look, we're only one headline away from some kind of positive thing, and it's going to go back to unchanged, back to green, and look what happened.
Yeah.
So,
good. That's you can't teach that. That's trader intuition.
Yeah, I mean, you can call it luck, but luck is when you have seen something a million times. It's a function of that too.
You were lucky you got up this morning.
That is very true. That's very true. Like a friend of mine says, life is a collection of small miracles. You wake up, it's a miracle. You open your eyes, you can see, it's a miracle, right? You get up.
Who was the golfer who said, the more I practice, the luckier I get?
Yeah,
too.
Absolutely.
Yeah. Anyway, great trade, Stel. Nice.
Thank you.
You're like Stelios Tudor Jones. All the big money's baited the turns. That's what he said. So, very nice trade. Ryan, good morning to you.
Good morning, mate.
How are you?
Oh, good, mate. You?
I'm doing pretty good. What do you make out of Euro bouncing? I saw this level was, there's a red line here with 61.8. So, nice pullback if you're bullish Euro to consider, right?
Yeah, I managed to jump on those Lavrov headlines. I've piled into Euro yen because I've been looking at that this morning for option trades. If you're going to look for a Russian invasion headline trade, probably the safest is to look at options. But the headlines dropped, as Stelios said, and as we said in the room. You've got to look both ways. As much as there's volatility for negative headlines, you get the same volatility on the positive ones.
Yeah, I know some smart guys that don't think he's going in. And I don't know. I asked them, why did he put so many troops up there? What's he trying to,
Well, that's the thing. I mean, it's you've got to think that probably a lot of this is just chest beating. What does he want? You don't just stick 100,000 troops on a board unless you're trying to push the boat a bit.
It's pretty expensive to move that much military and equipment there.
Yeah, he's not paying for it though, is he?
No.
Never-ending supply of money.
Yeah.
But
okay.
It's.
I don't know what that's like.
It's always a risk. You got to think. We're probably not going to see any conflict or something minor, but you can never rule it out, and that's the problem we've got. You can't just go ahead and buy every dip and think nothing's going to happen, because
the toughest trade would be short crude, wouldn't it?
Well, exactly. And if something does happen, you're $20 offside before you can blink, and if it gaps, your stop loss isn't going to do you anything. So that's why I think maybe if you in these situations you look at options, if you can trade options, be it in the futures or FX or whatever, it gives you a low risk way of trading it, because you can buy calls, buy puts either side of the market, small pips amount, maximum loss that and it's a way to get out the noise and not get in that risk.
Yeah, look at the 10-year yield. So peaked pretty good at some people's targets. They've been talking about 2% for a long time, but today no follow through. Maybe we're going to blast again here, and that's why the yen might still have 117 plus in it.
Yeah,
what do you think?
Entirely possible. Entirely possible. If these Lavrov headlines turn out to be something a bit more substantial, that we are heading towards, a peace, if you like, then we're going to get back on the wagon, and we're going to turn right back to central banks and what they're doing.
Right.
We could see euro dollar back up, testing 115, like you say, maybe in dollar yen up testing 116 again, and yields up at 2%. it's a lot of volatility at the moment.
Opportunity,
but also danger. So you've got to be careful. Volatility works both ways.
There's a WTI.
Yeah.
So putting in a negative day. Yeah. If things cool down for a few weeks or a month, why can't crude pull back to 84 or so?
Yeah.
I think a lot of this is, I was thinking about this in case there was an invasion. You're too young. You don't remember many wars, but I remember, I think Blake was even deployed in the first Gulf War. What happened was gold and oil kept rallying into during the buildup.
Yeah. And
then I remember I was on the golf course, and there were TVs at that time, and said that a desert storm had begun. That ended up being a significant high in oil and gold, and an important low in bonds, and the stock market would rally on that. So, and then you also have, the Russian invasion of Afghanistan was the top of the gold market in 1979, 1980. How old were you, Ryan?
Well, I was just about to say, thank you for pointing out that I'm that young. I'm 49. Yeah. So
do you remember that?
Yeah, if I remember the first Gulf War, if memory serves me correctly, there was a last pop in oil because remember they set fire to the oil fields.
Oh yeah, yeah.
And then once everyone went steaming in, then it all settled down a bit. But it's the same. You buy the fear and you sell the act because it's often not as bad as the fear makes out.
Anyway, that's what I remember. So back in the old days, I had to rush back to my office because I had a customer that wanted to buy bonds. So, if you weren't in the office, you couldn't do anything.
No one could get hold of you. There's no mobile phones back then. Or
no.
Coverage.
Yeah.
Just get a runner running down to the pub. Get back.
And I was wondering, does anyone have an opinion on Canada bumping its head up against its resistance? Because it looks like over 128, you're going to have new highs for the move here.
It's a weird one, isn't it? I've been looking at the loonie because obviously oil's rocketing higher and this is going up as well. So,
So what happens if crude comes off?
If crude comes down, then this should
break out.
The risk, it should. Yeah. Well, I don't know. Or does it?
Okay.
Does it drop? It's dropping at the moment.
Yeah.
Because it's following the risk pattern. It depends where it finishes up. I think if crude finishes up, if this thing resolves itself or becomes less inflammatory and crude stays around about that 88, 90 buck mark, then I think we start to see the CAD take notice. And that's when we see dollar CAD dropping. But at the moment, it's still in the risk pot with yen and everything else. I think that's the main driver.
And everyone's saying this was a breakout in gold. I guess, cracked through some line here. So I don't know.
Good morning, everybody.
1910 is the gold.
I saw Greg's tweet.
An option player. It's stuck between 126.5 and 128. Could just be somebody sitting on a larger option or a range player, and then the rest will be decided by risk and oil.
Okay.
Just as an intermediate.
What about yen here? I know you're waiting for the BOJ, which we got last week. You doing anything in here, K-Man? Hello?
Was he gone? That was it.
Okay.
It's a one trick pony. He says one thing, then he's gone.
He came, dropped his wisdom. That's it. Drop the mic.
Sorry, my mic was gone.
Well, you dropped it. That's why.
Nicely done, by the way, on Speaks Stelios. No, I'm just trading headlines right now.
Okay.
But the Ishimoku cloud is lying around 115, so that's a level we can eventually trade off. And then the rest will be really headline trading right now.
Yeah. Okay. Fair enough. Jays thinks CAD's going to 132. Okay.
Hey, good morning, guys. How are you?
Hey,
Happy Monday.
Blake.
Hey, Blake.
You guys have to excuse me if I sound, it's allergy season for me. I even popped some allergy medicine this morning, and it hasn't really helped a whole lot. So if I sound, little snotty, that's probably.
Is that all the roses you've been getting for Valentine's Day?
Yeah, that's it. That's, I'll tell you, we only have 2 seasons here, but, we have hot and not so hot. So when it's, it goes from not so hot to hot, things are still kind of, blossoming.
Everything's blooming. Yeah,
they are. And, man, it kills me every 6 months. So if you guys wonder, that's why I sound the way I sound. Richard made some good comments. He said, "Good morning, all. Elected President Putin is trying to get NATO to keep their word they gave Russia in 1989. When U.S. Secretary of State Barker for the U.S. committed to Russia Gorbachev's for NATO, not one foot to the east, and instead they had rounds of eastward expansion. Very dangerous, in my opinion. Finland today won't dare even ask to join NATO for this reason." I think we've had a couple of politicians mention about NATO over the weekend as well. So, it's definitely a very fluid situation, but one of the things I'll be watching, I mean, from a just a market perspective, I mean, you guys can look at stocks and say, well, stocks are around, but I know you guys mentioned it earlier, just watch crude. I mean, if crude continues to ease off, the 94, 94 and a half level, I think that's pretty good, indication that things are de-escalating. And also, here, let me grab the screen.
Yeah, grab it. Yeah, I was wondering, Blake, a lot of people are talking about this gold breakout. You show the same thing too, and would you go with it?
Yeah. So first of all, let me just talk a little bit about crude. And I just wanted to mention this. So I think crude's coming back to the mid 80s. We have this intermediate channel knocking our head up against channel resistance.
Nice.
You break through 90, we'll come back to 86, and that's like a breakout point. Now, longer term, this channel's much bigger and much broader, but I'm just talking near term, what's happening right now, like intraday. And I think that's what I'm going to be watching. I'm going to just be paying attention to crude. And if crude, gets back below 90, that signals to me that there is some de-escalation out there. That is where, the market's feeling more comfortable about the situation at hand. Obviously, there's a lot of headlines running around or flying around right now. And those are things that, us as traders are so glued to the headlines, but really watch price action in the market. I think the market's going to tell us a lot. Now, gold, because Dale, you mentioned it. Now, on the week ahead video, I mentioned this. This was a big breakout.
I didn't do my homework this weekend.
You did. You know what?
I was in a football.
I don't blame you. It was Super Bowl weekend. By the way, great Super Bowl last night. For those of you that missed it or don't watch it, or are in Europe and you might have been sleeping or whatever. Great Super Bowl.
It was a big risk, right, that they took, the Rams.
In
terms of buying players and giving away their.
Run
in there.
Stafford.
Yes,
exactly.
For Stafford. And that guy's got a big. He's got a big contract. That they got to pay, and he won, and and it was, but it really wasn't him. It was
defense.
It was Arnold, man, right?
Yeah,
the defender. I mean, that was him. He should have been the
MVP.
He should have been the MVP. I mean, he really should have been. I mean, Cooper Kupp was awesome. But anyway, it was a really good game. But I have to hand it to Burrows from the and I know he's a young up and coming #1 draft pick last season. He's awesome. That kid's going to be going far, and that's not the last time we've seen him. We're seeing that kid. He's a badass. He's going to be awesome. Anyway, but great game nonetheless. It was a really great game. Which I love good. If I don't have if I'm not.
All I want to see is a good game.
I just want to see a good game. If I'm not super, attached to either team, and that was a good game. All right.
If we want to bet, we could bet 100 times a day right here.
Yeah, there we go. Let's talk a little bit about gold, because gold is what I I mentioned on the week ahead video. And, we had this breakout, we closed in breakout territory. And this is something that I would be watching very carefully, because if gold gets back below, like, let's say it's about 1840, then that gives us a false breakout. Now, if that gives us a false breakout and gold starts heading the other direction, that is going to be a risk, because then and I'm kind of giving you guys my outlook on the week ahead video on what I talked about, but I want to talk about it here because I'd love to hear, when it's a week ahead video and it's just me talking about it, it's different than, us, debating about it and discussing this. But gold breakout here, okay, you get a reversal. And what I said in the week ahead video is if gold reverses and we see a break back below, let's just call it 1840, that gives us the technical signal that gold has reversed. Now, a lot of analysts and a lot of economists believe that inflation data is peaking this month. Now, or that means the March reading is going to be, not as hot, and you're going to see, inflation moderate. Now, it doesn't matter what side of the fence you're on. You could be like, oh, Blake, you're so stupid. Inflation is going to continue to rock and roll and blah, 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 and prices are going to fly. Or you could be, like in that, I totally agree with that. It doesn't really matter, because we just have to wait for the data. So you can have your opinions. We all have opinions. They're like, belly buttons. We all have one, right? So, but the technical setup here is you get this reversal. If we drop back below 1840, we have producer pipe. It's Monday morning, guys. Excuse me. Producer prices this week, right? And that's the big, U.S. economic data this week is going to be producer prices. I know we have retail sales data coming out, and we have a crap ton of Fed governors speaking. Bullard today for one, but really the producer prices on Wednesday. Is it Wednesday? No, it's tomorrow. Actually, is going to be pretty key, and we'll be here covering that. By the way, if you guys miss us normally on a daily basis, we'll be covering that live as it comes out. Now, if let's say that narrative is right and producer prices come in a little weaker, and that translates to possibly lower consumer prices in the future, you can see a reversal in gold. And if gold reverses, back below this 200-day moving average, then you got a false breakout. Then you got a false breakout leads to a reversal. And typically when gold goes down like that, I'm sorry, I should probably say it this other way. Yeah. If gold goes down, you could see a big reversal in gold prices here. Right. And if gold goes down because inflationary, pressures are coming off, and you have this like inflation hedge that's not really rallying, and then it got a false breakout on Russia, then you have to think about how you could trade that through FX. But just kind of, I'm not saying it's going to happen. I'm just saying, I think we all need to be on alert right now. It's something that, because I don't know if I see, and what do I know about this? Other than being a combat veteran, I don't know, but I don't know why Russia's really going to go invade Ukraine on a, like with soldiers and tanks and, being an aggressor. I just don't see it. But anyway, that's just me. So what are your guys' thought here on gold and going with inflation data coming out this week? That's like a setup, in my opinion. That's a really good setup if you're a gold trader.
Personally, I don't think my view. I'm bullish, but I don't think. There's no breakout yet. Okay.
Yeah, how many people are sucked into this breakout right now?
Yes. Right? So in the very short term, I think a lot of people have been sucked into that, and one bad number basically will can basically take all those people out. So I don't think we're done yet. Gregor posted a really nice he tweeted something this morning. He wrote it on the chat room as well, I think. Really the level in gold is 1910. I know it's $60 away, but 55, but that's the level. once that is broken, then we could talk about the proper breakout. But until then, I think it's going to be a bit volatile, and it's I just want to say we haven't seen the breakout yet, so it could take everybody by surprise, I think, if we get a bad number. So,
okay. Yeah, I mean, that's just something I think is the risk right now.
What about the expedited Fed meeting that a friend of mine sent to me, that they're going to meet on Monday, that they're, under expedited procedures as set forth in section 261B7. So that's today.
What's that, an emergency rate hike?
Yeah. Well,
for what? To create panic? I mean,
maybe.
For why?
All I've seen is these headlines: emergency meetings, unprecedented
blah, blah,
meetings. Blah. It's not. They have 2 or 3 of these a month. I put the tweet out yesterday.
All right.
They have 2 or 3 of them. I think that I clicked on one by random. They were discussing the same discount rates in October.
Okay.
Doesn't mean they can't make changes to them, of course, but this isn't an emergency meeting. This has been scheduled. Right. They have 2 or 3 of these a month.
Okay. But they could change the rates.
Oh yeah, they could do anything they like. But even today, someone put out on Twitter about Bullard's comments on Friday. How he did the flip to 50 basis points. That looks to be a typical Bloomberg fluffing up a story, because when you actually read the comments that Bullard said, pretty much the opposite of how Bloomberg painted it on their headlines on Friday. So again, you got to watch these headlines and get into the details.
So let's and thank you, Ryan, for your comments. K-Man, did you have any comments about that? Did you want to add? Unmute your mic if you're talking. It's just as a reminder. Okay, he doesn't. It sounds like he's not here. Right, K-Man kind of jumps in and out. So one of the other things I think that we should be watching is we should be watching these cryptos. These are, and now I saw a tweet the other day which I found humorous, but also true. Right. So somebody wrote, the theory of cryptocurrency being a risk-off hedge it was completely debunked today. That was as of Friday, and I'm like, well, that's true. Whoever thought Bitcoin was a safe haven store of wealth was incorrect. At least based on the headlines that we saw on Friday. But one of the things that I do still believe is Bitcoin and Ethereum. You notice I'm not jumping into what is Dogecoin doing? I could care less about that. Just some of the major crypto names, they are firming up as risk appetite is firming up too. So that's something that we also have to pay attention as well. Just as long as these cryptos stay bid, then that's probably a pretty good. It keeps us in the camp that things are progressing in a positive manner with the Russia-Ukraine situation. That's the way I would be thinking about it as well. And you can see, these cryptocurrencies are they're near their highs of the session. Here's Ethereum, trying to break higher. Here's Bitcoin. I think if we get above 43,000 was a big support that we'd been looking at, all last week. But look at this nice little inverted head and shoulder pattern here. You can see it. Let me grab I'll just draw here. You can see the nice little inverted head and shoulder pattern developing. So if we clear, this little neckline here, you can see a rally back up into the 50,000s. I don't think that's impossible, especially for crypto. So it's just something that I think we should all be watching. Okay, so any other thoughts here, guys?
Yeah, if you ride that, you could buy some virtual real estate, which I have no idea what it is. But
I cannot wait to use the restroom in my
well, if
in my new
it's your land
condo in the metaverse. I can't wait to be the first one to take a dookie there. Okay,
yeah.
I'm sorry. What were you going to say, Steph?
There was a really good tweet today by somebody said Russia has invaded the Ukraine in the metaverse.
Oh my God.
It's just something.
How will Biden react to that? He'll put the goggles on.
Yeah.
And I mean, seriously, I actually, this has nothing to do with Ukraine, Russia, or anything. But I have to say this. I saw the funniest tweet last night. I was going to retweet it and I decided not to because I was too busy watching the Super Bowl. Somebody just before the Super Bowl said, if you're excited about the Super Bowl halftime show, you need to go schedule your colonoscopy.
Because they're older people.
It's Dr. Dre, Snoop Dogg.
Right.
And I was dying. I thought it was the tweet of the day that I saw yesterday. Anyway, okay.
Everyone should have one if they're 50.
Well, yeah, because if you're my age and you're 50 or above, yeah, you should.
I've scheduled it for this year's
it's
general
time.
exam.
It's time.
Yeah,
it's time. Yeah, but if you're watching Dr. Dre and Snoop Dogg and 50 Cent and you're like, yeah, these guys are great, then you probably need to go schedule yours, which I thought it was the best Super Bowl halftime show I've seen in ages, probably since Prince. Anyway, hey, well, let's look at the Aussie dollar really quick because the Aussie dollar is a pretty good benchmark for risk appetite here. Notice how we had this inverted head and shoulder pattern. We were looking at this as a complex inverted head and shoulder pattern. The reason why it's complex is because of the cockeyed nature of the shoulders and the neckline. And we came back and tested basically, close to the 618 retracement, but we are bouncing here. And, I think as long as the Aussie does not breach new lows, this is the risk is that we start pressing higher back into the 72 cent, maybe even a 73 cent level, especially watching risk appetite. So one of the other things I want to point out about the S&P, since we are talking about a bounce in risk, the S&P actually hit the 618 retracement. Now there's a double top here. The double top completion takes us to 4,300, but just because the double top completion levels down here doesn't mean it's going to be reached either. We have hit the 618 Fibonacci, retracement, and this is obviously a very, very critical, level support for bulls. And we may not get down here. We get back above this 4450 level, and we are going to do squeeze city back up to these recent highs. So that's something that I think traders should be paying attention to as well. So anyway. That just some food for thought. Now, Dale, I want to talk something really quick. This is not market related, and this is for everybody here. If you are not aware that tomorrow we are doing our Supercharged Webinar. This is supercharger trading. This is something that could really literally change the way that you trade forever. And we have not, this has been very hush hush. We have not revealed anywhere what this is, but you guys should register. It is tomorrow. If for some reason you can't get there, make sure you register and watch. And I'm going to put the link right here in the chat box. Make sure you register and listen to the recording ASAP. So if you happen to be away from, you're like, dude, I have a doctor's appointment, that register so you can get the recording and then listen to it as quick as possible, as soon as you can. It's time sensitive. So it is going to be a pretty big announcement. It's not only could change the way that you trade the markets, but it's also, could really change our community, how we do things here at ForexAnalytix, how we've, done everything for the last 5 years. It could really,
it's like a natural progression.
It really is. And I think it's a big deal for us and for you, but more importantly for you guys. But it's a big deal for us because it's something that we're embarking on as well. So make sure you guys join in. I want to, and it's free to, listen in. It's not, it's nothing more, and it'll probably be 30 minutes, tops. I would say. So anyway, just letting you guys know that is happening tomorrow. We'll see you guys. We'll see you guys there.
Better than that, DJ.
So Ryan, K-Man, Stelios, any other last minute comments before we have, I guess, Steven's going to be joining Dale today. Yeah. So any last minute comments, especially with this whole Russia thing that's
I just want to reiterate my view that I still think we should be selling rallies in risk. You know, we had the whole Ukraine situation potentially. Okay, maybe that's going away slowly, but then we have to go back and look at yields, and the 10-year US is still quite close to 2%. And I think higher yields are going to eventually push risk assets lower. So,
by the way, I have to say that was a really big bounce that we saw in bonds Friday of last week. Yeah. Remember, we had the ABCD completion. Oh shoot, that's not what I wanted to do. Sorry, I grabbed the wrong thing there. We had the AB equals CD completion of the market, of the bond market. So we are bouncing, recovering a little bit. Remember, the 10 year is like such a big level that you are probably going to have to see us hit it a couple of times. It's like a battering ram trying to knock down a castle, gate. It's got to have to hit it a couple of times before it can really, break it. And I think the 2% level is like that. So, and then technically, 10-year bond market just hit low. So that's a really good point, Stelios, that, we have to see, the yields are perched up at these levels. So stocks aren't going to like that over time. Right, Stel?
Absolutely. I still think the bias should be to be selling rallies. Obviously, could be wrong, but that's my bias at the moment. It's been working pretty well for the past week or so.
Yeah, you nailed it. You nailed it here in your pattern and play. By the way, very, very, very great job, Stelios. And Ryan, do you have any last minute comments?
Yeah, just traders need to stay nimble. We're in a period of heightened headline risk. They can come out either way. So, keep an eye on your trades, keep them controlled. Don't go too heavy on the risk. Know the conditions you're trading in right now.
Yeah. All right. Very good. I don't know if K-Man's here, but Dale, it's all yours, buddy. And have a great interview. Folks, thanks for joining us. Make sure you register for that webinar tomorrow. And I'll see you guys. I'll see the ForexAnalytix community. I'll see you guys on the Morning Edge in 45 minutes. So,
okay, thank you, Blake, Stel,
thanks,
Ryan,
everybody.
Team.
Cheers,
guys. Can I say this before you guys go? It is Valentine's Day. Well,
you're my Valentine, Dale. You know it.
I love you, man.
Wait,
everyone's saying the word love. Yeah, we're a little gay, Stephen. Yeah, we're gay.
You have to register for the webinar here. You click on it, then fill out your name and email address, and then you're good to go. Okay. All right. See you guys. Thanks, Happy Valentine's Day, ladies. Not you.
Oh, Dan. I love you, man.
No, not you, Dan. All right. Bye.
All right. Blake's going to throw up. Anyway, Stephen, my trading warrior brother. Don't worry, I won't. Make a move on you.
How are you doing?
It's Stephen. Good. How are you? Good time to have you here.
I'm pleased to be here. When we arranged this, I said, "Oh, it's Valentine's Day," and then my wife said, "Oh no, don't worry about it." So I really should be taking her to lunch today, but I'm with you instead, Dale. So you need to be my Valentine.
Happy Valentine's Day. So you want to share your screen, Steve?
I wasn't going to share my screen.
All right. Well,
we've
then
done this before. We just had the conversation.
Okay. You want to show your face?
Sure.
All right. We could do talking.
I don't seem to be able to.
Let's see.
You won't let me.
Video. It won't let you? Okay.
No, it says you cannot start your video. It's the host has stopped it. So you need to change something.
Yeah. Okay. I'm not sure. Let me see.
But while you're doing that, I'm going to just tell you that
Go ahead.
I had lunch so I'm in a kind of like a WeWork kind of place in central London, and two girls sitting beside me at the communal area, and they're speaking Russian. So I said to them, "Well, what do you think President Putin's going to do?" And they think he's going to do something. They don't think he's going to invade, but they think he's got to do something to save face, because there's a huge number of troops amassing on the Ukrainian border. Yes. I don't think it's going to be, I don't think they're going to be invading, my perspective. I was talking to a few people about this, and the thing is that if you're President Putin, right now, you are loving the situation, because you've got European leaders queuing up to speak to you. And you've got President Biden on the phone every week. Putin must feel really, really important right now. And that's what he likes. And of course, the oil price has been heading up. And that's exactly what Putin wants. That's exactly what Putin wants for the Russian economy. Right. So I think this is, exactly what Putin was hoping for. And I think it's all, from his perspective, this is an ideal scenario. You might have to do something, some border skirmish, but I don't think, and interestingly, my Russian friends at lunchtime don't think that the Russian people want to invade Ukraine, which I thought was quite an interesting comment.
Yeah, that's interesting, because I just heard his numbers are 65%. I mean, compare that to our president's. Okay. So he's popular in Russia.
Yeah, I mean,
that's a correct poll.
He has been pretty popular, and of course, the Russians are quite used to hardship. Yeah, after all the years of communism. But like everybody else, they've got aspirations. They want a buoyant economy. They want jobs. They want to make more money. And the Russian economy is contingent on the price of resources. So, right now, Putin's got everything going for him. If he wants to do something, he should do it now, because, of course, the ability to retaliate is restricted by the fact that we all need the Russian gas. Yeah. So it's still winter, right? So he can do what he wants right now, and the ability to retaliate is restricted. All he needs to do is switch off the gas tap for a few days, and there'll be people in Germany who can keep their homes, and throughout Europe. So, but I just don't see what the upside for him is in invading Ukraine. And the thing
I know some smart guys that didn't think he would. And it's not because they're mind readers, it's because of what they're seeing in the ruble.
Yeah.
You had this failing rally Friday. It was unable to make new highs. And what they're seeing in the Russian stock indexes, they say they're bullish, if you're an elitician, that it's bullish. We could pull back a little bit here on some of these Russian indexes, but I mean, here's the ruble, and he thinks the ruble's headed a lot lower. So here's your daily, when the dollar turns, if it has already, that this could be some type of real nice short, right?
Yeah, and the other, buying the Russian stock market, it takes an element of bravery today, but it's very energy intensive.
Right.
So if you believe the oil prices are going to head up higher and gas prices are going to improve in the next 12 months, then that could look like a really smart move. It might look like an awful move for a day or two if he does do something. But, starting to do that, or starting to edge into a position might be a smart idea. And you see, it's just hitting support, yeah?
Do you trade? Yeah, these are the two ETFs that are on the exchange, two Russian ETFs, and they both look very similar. They're a little different in magnitude, but I know a lot of people they're smart guys that are constructive on Russian stocks much more than Americans, U.S. stocks. So that speaks to, you're right. There's not going to be a war.
And I mean, the other thing to note, I mean, I'm not particularly bullish of the US stock market, but people were saying, oh, well, the market's vulnerable because people are worried about Ukraine. I mean, if Russia invades Ukraine, it will make no difference whatsoever to any US company's earnings. Or energy prices might go up. There'll be that indirect effect. Apple might sell a few less iPhones in Russia, but I mean, in reality,
less wheat on the global market. Wheat took off during this ramp. So I'm wondering what you think, Steve. We had basically Friday in the euro. I don't know what you're focused on nowadays, but it was safe haven buying was what was going on. Do you think the dollar has already peaked, or there's another push, another new high coming in Dixie, and that the euro could still see 110? Well, what are you thinking in the markets here?
I think the dollar is well placed, because it just looks like the US, as usual, when it comes to financial markets, is less behind the curve than other central bankers. I wouldn't say that they're obviously behind the curve of central banks, but the American central banks are a lot better than most. The Federal Reserve's a lot better than most of them. And so what we're going to get...
the BOE already raised rates twice, so
but,
aren't they ahead of the US?
Well, I suppose the UK is, but you're talking about the dollar euro. And okay. I think the euro, I think they're going to struggle to put rates up much. The thing is that in the US, average earnings are going up significantly already. And that's not the case in Germany. Average earnings have gone up a bit, but nowhere near at the rate that's happening in the United States. The specter of inflation is, I think, much more distant in Europe than it is in the US. The economy isn't accelerating in the same way. I mean, the UK is slightly different. I mean, UK, we do have a problem, but I don't think there's nearly as big a problem in Europe. And I think that Europe will really lag when it comes to interest rate rises. So if the dollar is where you can get the higher rate of interest, then surely the dollar will strengthen. That's historically been the case. So I wouldn't be too bearish on the dollar euro rate.
Okay. All right. So you're still a dollar bull. What do you think of the move we had in gold on Friday on this? Is this just safe haven buying that'll dissipate?
I'm being totally puzzled by the gold price, because the gold price should be a lot higher. I mean, I've been bullish on gold for 10 years now. And, I didn't sell it at the peak and kicked myself. But I've been consistently buying it when it's been bottoming down. And it just seems to me that we're in an environment which people are accepting that there's going to be higher inflation. People have been buying cryptocurrency, but they haven't been buying gold. And that doesn't make a huge amount of sense to me. And I would have thought that, the volatility in crypto should have had a positive impact on gold. Now, I don't think the markets really believe that there's going to be a Ukrainian invasion, or gold would be a lot higher already. So I don't quite know why the gold price hasn't been doing better than it has, but I think it will do better.
It will do better, the gold.
Yeah, I think it will. I mean, I don't see, okay, interest rates are going up a bit, but they're still historically very low. If you've got an inflationary environment, you're trying to protect the purchasing power of your money. I mean, historically, gold has been a good place to do that, hasn't it?
Yeah, and silver looks like it's outperforming. Again, last week it was pretty weak, where gold was pushing the new highs. Silver just got back to its high of the week. So silver should follow then, right? You like silver?
Well, silver, generally, in my experience, when silver has been leading gold, that's been the bullish signal. And the fact that it's not,
I hear silver.
Well, silver's been lagging gold, hasn't it?
It's been sideways, but this is I took some silver. I have it on my hair, but this is the gold silver ratio, and it's been in a huge range. It looks.
I mean, what I would like to see is silver breaking out against gold, because I think that would be a good signal. But I think medium term, I think gold is still a good place to have money.
Okay. You following yields at all? I was calling for 2% a long time ago and took longer than I thought, like most things do. What do you think? Could rates be peaking in here?
Well, I think if there's an element of worry about Ukraine. I read last week that we got 7 hikes being priced in for 2022. I mean, that's quite a lot, right? I don't really see why people should be buying bonds. It just doesn't seem like a very good place to put your money. But I suspect that short term we've had quite a good run, and we might see a bit of consolidation. That would be my guess. But I mean, there are huge swathes of people that have got 60-40 style portfolios that really shouldn't have, because a 60-40 portfolio just isn't going to work for the next 10 years. So all that money invested in bonds has to go somewhere else.
Tina?
Yeah, well, that's what it seems like, doesn't it? I mean, if you can find anything else, I mean, I was talking to a friend of mine at the weekend, and I have had mixed experiences with residential property investment. Residential property investment is incredibly popular in the UK because it's, we've got a situation in which we don't have enough houses.
Yeah.
So, buying an apartment to rent it out has been a very lucrative, very profitable affair. But I've always disliked doing it because I've always had bad experiences, tenants that are difficult, that don't pay, property refurbishment. And, it's just that relative to owning a stock, where if you change your mind, you can just sell it there and then. Selling a property, there's a lot of frictional costs here. There's stamp duty, estate agents, realtor fees, and just the cost of doing it. I've never liked it.
How about virtual real estate? You buying?
Oh yeah. Well, what is that about, Dale? I mean, you and I are too old, right? We just couldn't get that. But you know what? I mean, if everybody was playing a game in a virtual world and having a home in that virtual world gave you an edge in the game, I could understand that those properties would change value at a premium if there was a restriction on their production. But, people are selling real estate in virtual worlds that there's no other reason to be in the virtual world other than to visit your virtual real estate. Well, that makes no sense at all to me. Why would anybody pay money for that? I mean,
they have a place to put their NFTs.
But, I mean, what's the value? Why would somebody pay $100,000 for a virtual mansion?
Yeah.
I mean, look, if I'm missing something, please tell me. Please, somebody put in the chat, explain to me why people are buying and selling virtual houses. I expect that they're only buying it at the moment. They ain't going to be selling them for a premium.
Oh, Jane says it's for laundering their NFTs in their.
Well, I don't understand what that would be, though. I mean,
I know. I just thought I would see.
No, I was investigating this because I was thinking, maybe I'm missing something, and maybe there's an opportunity. And I think there would be an opportunity if there was a virtual world where people all wants to be, but we don't know where that is yet. Even Mark Zuckerberg doesn't know where that is yet. So once we know that, then for sure there'll be, you know, an interest in owning a home, a store, a cinema, and having, you know, virtual commerce. I mean, I can completely understand that. But owning owning a virtual home in Mauritius or wherever, it doesn't make any sense.
Okay. So are you in kind of a zone of not having a lot of conviction about much with these markets right here, Stephen? That's just kind of what I'm getting from you.
Well, I mean, I think, you know, we're in a period in which it wouldn't surprise me if the market trades sideways for 12 or 18 months and you just see a lot of rotation. And, you know, I think we've had a huge amount of rotation out of growth. And I think that short term has probably run its course, but it's not run its course for the next 18 months. And I think we're going to continue to see people selling stocks like Facebook and buying Exxon and JP Morgan. And I think we're going to be in that rotationary period for, I would guess, you know, a good, certainly for the rest of 2022. I mean, it may be that it all happens quicker than I think, but I suspect that there'll be, you know, as you know, usually happens, stock market doesn't go anywhere. There's a huge amount of rotation, and we'll then see, you know, as you know, the results come through for the energy stocks and the banks and the value stocks, which have been neglected for so long, people will then be forced to sell their growth equities and buy into those. And so I think we've got, you know, there's probably quite a lot of pain to be endured by the people that have been buying these growth stocks. I mean, there's been some really uninformed buying of some really poor quality companies at really high valuations. I mean, Peloton is the poster child for this. I've got a slide in my the course that I run for professional investors, which has got the slide that shows the mottos of WeWork and Peloton, and ask you to guess the companies. And you know, you just need to read the slogans of these companies. You know that it's absolutely stupid. I mean, you know, WeWork wants to change the world. Peloton slightly similar, and you know, a lot of money has gone into these things, and I think people will endure a lot of pain before they finally get around to selling them. And I think it could be, you know, this could take the market just to get out of that mindset and get into the mindset of buying real businesses again.
It'll take 6 months.
I think it'll take longer.
Okay.
I mean, it's quite interesting. You saw, I mean, Facebook and PayPal selling off by 25%.
Yeah.
That's quite remarkable. I mean, I've never seen stocks of that size have corrections of that magnitude so quickly.
20% in a day.
Yeah. Well, I mean, both of them were more than 20%. And if you think about that, Dale, right? I mean, there's, you know, clearly a huge amount of liquidity. Nothing that Facebook said was exactly new news, was it? I mean, my 12-year-old, now 13, he's on TikTok all day. He's never looked at Facebook. He's on TikTok. I mean, when I say he's on TikTok all day, if he's not in school, he's on TikTok, right? And on it constantly. And, you know, it cannot be new news to anybody that TikTok's competing for people's attention, younger people's attention with Facebook.
Just think how many people are trapped here. And, you know, when you have these big gaps, and, you know, there were people hanging tough in it for, you know, a long time, even through this sell-off. But now they're trapped. All these people are trapped.
Yeah, well, I think that's right. I mean, I happen to think that Facebook probably isn't the end of the world. You know, when We knew about the iOS changes. We knew that would cost them some revenue growth. And the thing that I think is quite interesting is Facebook is now trading at a sub S&P 500 multiple. It's still forecasting revenue growth. Yeah. It's not like we're looking at it and going, oh man, it's all over, and they're shrinking. The business is still growing. And even if it doesn't have the growth in the number of subscribers, it's got a number of protections, I think. You know, first of all is the price of the ads. I mean, I advertise behind the balance sheet on Facebook, and the ads are good value. I mean, if they put the price of the ads up, it wouldn't stop me advertising there. The only thing that stopped me advertising there was if I wasn't making money by people, you know, seeing the ads and coming to my website. And I think we're some way away from that. And the other thing that I think people have forgotten is that Facebook, Meta Platforms, owns WhatsApp. How many WhatsApp groups are you in? Have you got on your phone, Dale?
None.
None? Well, you're unusual. You know, I've got the neighbors, I've got the kids.
Yeah, because it's all
I've got
encrypted.
The school. I mean, and you know what? I never see a single advert.
Huh.
I mean, you know.
All right. Okay. So you like, you know, long term, it could be, you know, a great position. It's just the market has had years of excess, and it takes time for that to wring it out. But I know guys that are looking for 6,000 S&Ps this year.
Well, I think they're going to be sorely disappointed. I mean, do you think the market's going to rise that much? I mean, I know I've said there's no alternative, but I don't, you know, we're going to see, you know, liquidity being tightened rather than loosened. We've had 2 years.
Someone else I respect is looking for 2,600. So, you know, there's, you know, divergence of opinions here on the market. It's the first time there's been this kind of divergence of opinions in quite some time.
Yes.
You know,
and I think that's quite healthy.
Yeah. So not a one-way street. Not everyone's a genius because they own the spider passively anymore. So it's going to change, and people are going to have to learn to be stock selectors instead of just, you know, buying an index.
Yeah, well, I'm hoping that's the case, because obviously my business is in teaching people how to pick stocks. So if they need a bit more help, that would be quite useful. What's interesting, I think, is that I've seen, and, you know, friends of mine have seen, you know, reduced volume.
And your stuff is mainly, you know, the fundamentals. You go over the balance sheet, teach people how to read a balance sheet, Steve.
That's right. Yeah. So teach them how to read a balance sheet, how to buy, how to find good stocks to buy, how to research them, how to value them. And, you know, we've got a lot of free material there, Dale. We've got a YouTube channel. It's youtube.com/C/behind the balance sheet. Lots of good stuff on there for free. But
is that you, Steve?
That's me. You know, I've been doing the videos now for a couple of years, but when I started, I found it really uncomfortable. I really didn't like doing it, and I've got that very pained expression. I should re-record that video, because now I'm much more relaxed about doing it. But it's funny when you start off these things, it's very hard not to be quite stiff, because you're not. You know, I've done Bloomberg in front of the camera, you know, or CNBC, but then you know, you're talking to someone, doing a piece to camera where you're trying to. I never even recited a script. I just made it up, because I thought if I had a script, I'd be even more wooden. But I did it in a very casual way, and I just couldn't get myself to look normal and natural. It's a very, very tricky thing. It's funny.
Yeah, you can't teach it.
No,
it's the it factor, buddy. Anyway, Steve, thanks. Maybe next time you could, go over some of the things that you look for in selecting equities, and maybe even have a few examples of what you're looking for.
Oh, sure. I'd be happy to, Dale. Sorry. I mean, if you'd said, I would have been happy to.
I mean, I interview a lot of people, and, I remember going over your website before, but, that'd be edifying too. I like just bantering about everything going on with you too, Steve. But
okay, cool. Well, look, next time, let me run through one of the little mini courses that I do. That'd be great.
Yeah.
I look forward to it. Thank you so much for having me.
Yeah, that way the community can learn a little bit, right?
Sure, absolutely. I'd be like, all right. You take care.
I appreciate your time though, Steve, that you came.
No worries.
Came in.
I enjoyed it. Thank you.
All right. Adios, everyone. Steve. Anyway, guys, I'll see everyone for Turnaround Tuesday. And in 15 minutes, you could join the team on the Morning Edge. I'll see everyone tomorrow for Turnaround Tuesday. Silver pushing. Adios.